So we're going to cover support and resistance and Fibonacci here. Now, when you first open your charts, what do? For me, I go to the larger time frames. Here I have the weekly chart, just to get a sense of where I am. As we cover the tools, we'll see that many of them also apply to these larger time frames and give us perspective, an overview of where we are. So we don't want to have that tunnel vision where we're looking at the smaller time frames only. So this is a good place to start and simply mark some support resistance levels. Now I wouldn't worry about going too far, going too crazy back, because day trading, whatever's in play, this level is not going to be tested anytime soon. So we mark up our our relevant levels. Go to the daily chart, maybe we fine-tune them, see if there's anything else that stands out. Particularly, I would like to look at the most current swings. So I would pick this. It was the recent high of this in here, the most recent high of the swing, previous swing. And that's in play right now as a resistance level that's getting tested, so we want to be aware of that. 4 hour. Seem to have most of it covered. Tighten that up a little bit. So that's our simple support resistance. And we have some levels marked as we go through the day. If we were looking to take a trade, of course we would have these levels. Consider them if they're getting tested, consider them for a few purposes. What stands out here, and I'm just at a live chart, happens to be January 24th, 2014. And also I particularly like these levels. Well, I would mark this either way because of this resistance. But if you notice, it's also support in the past. It's also weekly pivot. It's also S1. So there's a lot of confluence, as it's called here, where much of our analysis, our support resistance, is telling us that is a key level. Now we're not anywhere really near it now. In the future, if we were to come down to this point, of course we would consider that potentially a strong support and use our analysis to judge what is happening at that point, if we can expect a bounce or a break. So information can come from that. And of course we have our daily pivot and our other levels. So starting with support resistance, I also might want to throw in this one, which is a previous resistance, but it did get broken. And now one key thing about support resistance, now it's very simple and you may be already doing this, but something that a lot of traders overlook is that previous resistance becomes support. Previous support becomes resistance. So again, we mark this as a support area, first of all. If we were just looking back here, and we would see an obvious support over a couple of days, and we would mark that. Now going forward, that support level becomes a resistance, and we see in this case it respected it pretty much to the pip as a resistance level. So that is a big part of support resistance that people tend to forget about. Again, this may be an area. This is the recent high before it was broken. So if price comes down, this may be an area of resistance. Support, rather. It already was resistance, so it may act as support. And generally, if we're talking about the confluence idea, that we also have a 50 moving average, which I use as support resistance as well. We'll get more into that. Daily pivot. So we see particular areas of confluence, stronger levels. Now, also with support resistance, what I like to do is draw a box over the pin area. Now, this is a 1 hour chart, and this is where I start getting more detailed in my analysis, marking up the chart. So, for example, we can see here this low that was created. And going forward, we would say that's a support level. Now, let's draw a box from our menu, rectangle. And the idea is to simply cover the pin areas and separate the pin or the wicks of the candles, right, from the bodies of the candles. So the close, and so we're getting all pin and no body, as much as we can get without getting the body in there. And we have ourselves a zone. Now this is a support zone, and I like my zones. I also use Fibonacci for zones. So using this as a zone, okay, it looks like we came within a few pips, didn't quite touch it in this example, but using that as a zone, we have a support zone, and that gives you a lot of information and can really help you when looking to trade off of a support resistance level, which does come into play, of course, in this technique, along with other factors. So if, for for example, you're considering the support area for potential long based on your whole analysis, volume and everything else, and you're considering for a long entry, many people run into the issue where, okay, well, if I'm looking to buy off support, do I need it to test the ultimate support, right? If I'm looking to sell off resistance, in this case a very small box, if I'm looking to sell off resistance, does it have to touch this absolute high price, or where can I say now we're testing for support? Because often we see these levels get tested but not fully to the most extreme price. So we can get a bounce off support but we didn't touch the bottom, bounce off resistance but we didn't quite touch the top level. And you end up missing the move or saying, well, I'm going to have to go in early and hope that it doesn't go all the way. So that creates not a great situation, right? So using these levels and these areas as a zone, as price first touches, in this case it came very close. I'm just using a recent example to illustrate. When it just first touches the top of that zone, we can begin to judge the reaction. And this is stuff that we'll cover in the future with volume, and that's a big part of it. So this becomes an area that may or may not attract buyers. You may have a very strong buy signal just starting to touch this area, a very strong buy signal and a rejection. And from there you can have confidence about what happened there. You can also use the zone, secondly, to see if price is sitting within this area. Let's say you get a candle, another candle, and again, this is 1 hour. You can use this on smaller time frames as well. And you see price within that area. You can now judge, is the volume high? Are we seeing signs of strength? Are we seeing what we call accumulation? And these are things that we'll cover in the future. So we're looking at these zones to generally judge the behavior. So we could see certain behaviors going on in this zone that suggest it will break and continue down, or certain behaviors that will suggest that it will reject. And when it comes to the volume stuff, I will be mentioning volume a lot because it's a big part of course, my trading. But getting into the details of it is something that we're going to do after we cover these tools. Of course, you could always skip to it. So, looking, I'll give you a basic idea with a lot of this volume stuff, which is, in this case, we're expecting a bounce off of support. We would look for high volume, what we call stopping volume. So again, if we're within this area, and we can also look in the smaller time frames. Right now, we're just on the 1 hour, but I also use the 5-minute, most common combination of the 5-minute and the 1 hour, and occasionally the 15-minute. As far as this real in-depth analysis, I'm not going through all the time frames. Pretty simple in that way. So it's all just different ways of looking at the same thing, and these smaller time frames can give us a more detailed, up to the minute sort of view of what's occurring within these zones. So we'll get into that more with VSA as far as what we need to see. But generally, the idea is that the lower prices are attracting buyers, and those that are looking to buy off support would be buying into selling that's bringing price into that area. That would create more activity and higher volume. And professional buy activity in particular would create more volume, more activity in the market in the way in which they enter, that we'll talk about more. So we are looking for particular behavior. Also with support resistance, something we'll talk about more is, when do we consider it broken? With a candle closed below? Well, potentially. But there's also a very common pattern that occurs in the market, which is a fake breakout. So we'll cover that stuff as well. Okay. We'll stick to the plan here. All right, so we have our boxes, and again, we can draw them as we go along and see areas. In this case, we do have that example of overshooting that support just slightly and creating that fake breakout pattern. So that's a very common pattern, and we'll get into more about that. We can take advantage of trading off of those patterns. And just to give some more examples, I don't want to rush it. I would obviously mark that for future reference, that if price is now coming to this particular exact price level, give or take a few pips, we can tell exactly where we need to start seeing the evidence of selling if price comes into that area. And of course, we'll get into how to read that. So keeping those zones marked as you go through, very helpful. Okay, so the next thing we're going to cover right here is the Fibonacci. Let me start with a clean chart. Okay. So the Fibonacci retracement, very, very common among VSA traders, among traders in general, not VSA traders. Very common indicator in general. And the levels that I use are only the 50 to 618 levels. So let's see if I can just find a quick fib retracement here. So I choose my Fibonacci retracement here from the menu, drawing it from high to low. And we see the 50 to the 618 levels. Now, you'll automatically have more levels, and you can double-click this line, right-click, go to your properties, and pick the levels that you want in there or you don't want in there. So I simply have my 50 to 618 and some fib extensions you can see as well, which mark our support box perfectly there. So I'm only interested in this level. Now what I can do is, again, my box, take my box, draw it over that. So if we were in real time here and we had this down move beginning to retrace now, we can draw our fib from high to low and have this level marked in advance. As prices now start to retrace from the down move, we'd have our fib level marked, and we can actually get rid of the fib if we want. Because once you start drawing multiple fibs, what do you get? Lines all over your chart. You don't know what's coming from what, right? So luckily for me, I'm only using this as a zone. I can draw my fib, draw the box, and delete it. So very clean chart. I like to keep it as clean as possible. And so now we're retracing, and now we get up to that point. We can mark that zone. We can make it more clear if we want. And you can see just a clean recent example of similar to how I explained the higher volume rejections are more typical what you want to see for a setup for much of the setups we'll be covering. So you can see another example where the fib zone, Fibonacci zone, similar to the support resistance in that way. It is pretty much a resistance now that's projected based on this swing. So seeing if it behaves. And here we do see that example of higher volume, the rejection in the price action, stuff we'll get into. So watching the behavior in this zone is very telling. Now what's the first candle that really came into the zone was this one. And we see a sign of weakness, VSA-wise, the highest volume of the day, and the way the candle closed, stuff that we'll cover soon. So again, using that zone. Now, in drawing the fibs, before I get to that, if there is a close above, this was our 618 level. Now, if there's a close above the 618 level, I'll generally say this is not likely to reject and continue this downtrend in this case. Once it closes above the 618, it's more likely to continue. I would have my resistance box there. And as we go forward, you'll see this is all about probability. You'll hear me use the word probability a lot. So the probability of moving to this point has increased dramatically once there's a close above this 618 level. The probability of retracing and continue, just a simple retracement rather than a reversal, a retracement and continuing the trend, the probability is much higher when you see this type of rejection and start to pull away. And of course, we have our other criteria for looking for that short entry. So I do not look to go long on a break here. That's not a trade I take. But, well, you can consider if for other reasons you want to go long, that you have broken a 618, and now your probability, since you closed above, your probability has now increased to the upside. So using that information, you'll find that these are all tools that give you information about probability. So again, seeing a proper weakness reaction in this area, probability is downward. Seeing it close above, probability is up. I do more often look for the trade of a rejection and try to get in with trends on retracements. But if the situation happens to be right, and you're using the tools to give you this information, and there's a lot of things telling you to get into the trade, including a close above 618, that's reasonable. So like I said, you're not trading like a robot. You're trading using these tools to judge probability. You're going to be taking a lot of the same trades I'm taking, but some maybe not. Some you'll say, well, I like the fact that this is telling me this is telling me this is telling me this, and I see that there's a good probability for this to happen, and may not be something that somebody else may consider. So, but it is black and white information as far as what the tools are saying and how to use them. So we have our information about how to use this. As also drawing the fibs. Now, This is a perfect example here because some may draw the fib here, right? Picking the absolute high of this swing, right? Simply drawing it there. That doesn't look so wrong, does it? But the idea is, and I don't do that. Notice I drew it from here, or here, whatever is slightly higher, maybe that one. Because what I'm trying to do is, now, with a Fibonacci, we're measuring the percentage of retracement of a trending move, right? This is 50%. This is 61.8% of retracement from this range, high to low. This is halfway. So if we want to measure the retracement, we want to measure the retracement of a trending move, not including any noise that may have happened, or range, or other highs that may have occurred before the trending move. So if we started from here, we're not really measuring the retracement of a trending move. We're measuring the retracement from a high that didn't trend yet. And it's really, at this point, we can pick our highest point of the trending move. So that really should clarify. If we have a double top, I'm drawing it from the second top. Right? Double bottom, I'm drawing it from the second bottom. Let's make sure I just keep that, make sure that's clarified. I can give another example. Again, here, I would draw my fib from that high, second top on a double top. Double click there, delete. And I think you get the idea. I would draw it from this low. Again, drawing from this high to this low. Looks like there was a fib retracement there. Okay. Now, it's hard to overdo the fibs, as I say. And again, you can just draw your boxes and get rid of it. So now let's go to these larger time frames and see what's happening with our fibs here. We can see a 618 level here, 50 rather, that rejected price to the pip basically, and this is off of a daily chart, a huge move. Now this is a 5-wave up in an ABC retracement, and that's something that we'll get into. So you can draw them in larger time frames, and then you can go to the 5-minute chart, right? I'm sure we'll just find a recent one. They're all over the place. And here's the fib retracement there. Okay, look at the behavior. And we see the highest volume in a little while. We see volume starting to pick up. We'll get into the details of that. And look at the price rejections, how it's not able to close, how exact that level is. I just picked this at random. So this is repeatable stuff, very clear, very solid information you're going to get in these areas. You see the pins, the rejection. What does this tell us? Every time price moved into this area, there was selling. Now, who sells when price is moving up? That's how smart money operates. The herd, the crowd, they chase. So this is redistribution, and that's stuff that we'll get into. So that's tracking the professionals, and that's a tool they use. Mostly computers at this point, which is perfectly fine. Computers are clean, they're repeatable, they repeat, they're accurate, they're predictable. It's like playing a video game against the CPU at this point, you would have to say, with all the software and computer-generated trades. And again, that presents a weakness in itself because, and it's a funny example, but if you think about video games, and you get to those old school video games, I'm old, you get to the end of the level, right? You have to fight the boss. It's really hard, right? How do you end up beating the boss? Because you're outsmarting it, because it's a computer. It's doing repeatable patterns over and over again. And you find that little niche where, okay, when he swings this way, then he's vulnerable to this. I just have to wait. Every time he does that particular move, I get him. And I just have to be patient and wait for that vulnerability. But it's clean. It's repeating over and over again. So if you are familiar with the games that have that sort of stuff, so you get the idea either way. So again, the fib and the support and looking at those, the way price is behaving within those particular levels is very telling. Well, that's everything I wanted to cover in this video. I'd like to take a second before I end it, just so I see if I can think of anything else. But no. This is a case you see where the support was tested, but not the ultimate low. So again, if you were, for other reasons as well, looking to buy off the support, and it didn't quite touch the bottom, you may have not gotten in, you're not sure what you're doing. But if you see this type of reaction, that's just buying came in. Now, of course, we had more weakness in the background, and we would not want to be buying in this situation, but that's just an example. So, volume is really going to be guiding us as far as what support resistance levels, what Fibonacci levels that we want to trade and expect a rejection of. And generally, when price is moving up, I'm looking to sell. Price is moving down, I'm looking to buy. That's the VSA way. But it doesn't mean we're counter trend. In this case, we see a strong down move, lower low. We'll talk more about market structure, and the lower low is made here. Also, the 50 moving average is a nice indication of trend. So a few things to point us in the direction. And as price moves up, we're considering this a retracement. And we're looking to sell as price moves up and continue the trend if that setup comes around. That's because that's what smart money does. That's how they operate. We see this perfect example here of them selling into the up move. So volume is going to guide us and tell us if we're looking to take that trade at all. We also will cover some patterns and stuff. Okay, so that's it. Let's move on.